This episode of Empire is brought to you by Quicknode. Quicknode is an end-to-end blockchain development platform that makes building Web3 apps super easy. No matter what you want to build, you can effortlessly develop any application by leveraging their elastic APIs. Go to quicknode.com, use code Empire. You'll get a free month on their feature-backed build plan. That's right. Go to quicknode.com. You'll get a free month to start playing around. You'll hear more about Quicknode later in the show. This episode is brought to you by Synthetix, the liquidity layer for DeFi derivatives. With Synthetix v3, any protocol can now tap into Synthetix liquidity to bootstrap derivatives markets. You'll hear more about Synthetix later in the show. All right, everyone. Welcome back to another episode of Empire. You got Santi and you got Kain. Kain, welcome to the show. Are we still calling you the semi-benevolent dictator, or do we have a new title for 2023?
I think on Twitter, I'm the head of Decentralized finance. Someone wrote an article about me and put that in. And I was like, okay, cool. I'll take that. I haven't yet been rolled up by some international group of 3-letter agencies yet. So yeah. I don't know. Maybe no one takes it seriously.
Yeah. The CEO of Ethereum, huh?
Yeah, exactly.
Nice.
Someone's got to do it.
Yeah, exactly.
Hey, I'm just going to go straight for the jugular because that's what people are doing today. Yeah. Is your alt Dejan Spartan?
You know what's so funny is no, right? And like I think it is funny because there was a long time where people in Discord especially were like, this has to be his alt. Like it just has to be. Like it would just be so good. And like it's funny because like for a long time I've wished that it were, but I don't have the capacity to run an alt. I tried to run an alt for like a month and I was like, this is just
it takes a lot of mental bandwidth. I don't know how people do it. Like it also probably has like multiple personality disorder at some point. It's like actors like snapping out of like roles. Like Heath
it was fun. It was fun because I got to say shit to people that like sometimes I wouldn't be able to say. I was like, you guys are fucked. What's wrong with you? And then I'd be like, oh, I probably should be a little bit kinder than that. But, yeah. And then I was just like, look, this is too hard. I can't maintain this. I just can't maintain it. So I had to hang it up.
Okay.
So
I'll take that. So I mean, it's great having you on because you've been around in the space, and as we think about everything that's going on recently, DeFi has been in a bear market. Talking about Dejan Spartan, he loves to tweet this chart of DeFi versus ETH and how it's like
Maker versus ETH or whatever.
Exactly,
right?
He loves Maker, but just DeFi like as a composite has just been really in a brutal trend, even before Terra, even before like 3 hours, all that stuff. And now it feels like maybe, with all the bank runs happening, with the Binance stuff happening, centralizing exchanges kind of taking a big hit, it sort of does pose the question, and maybe this is the central theme of the episode is, so what does that mean for DeFi? Like and Synthetix has had some recent action, and historically Synthetix has sort of been kind of the leading the charge of the next run. And so I'm kind of curious to get your thoughts on everything that's going on.
Yeah, I think just on that point of like Synthetix leading the charge, right? Like, DeFi Summer, it was Compound launching a token, right? And, leveraging yield farming, right? To really, get like attention, right? And both of those things were, kind of Synthetix playbook, things, right? Like, the holding off and launching a token later, I think that was something that I think everyone thought Compound would do. But, juicing up the TVL, because that was the game at the time, right? Juicing up TVL was the name of the game. And Compound just took that Synthetix level playbook and said, okay, let's throw a bunch of tokens at this and see what happens, right? And it was incredibly effective. And that was kind of what launched DeFi Summer. Right. But, for all of 2019, and it's funny because like I literally compressed 2019 and 2020, about a month ago when I was on a podcast, like I literally forgot the DeFi Summer happened in 2020. It seemed like it was all very quick, but, Synthetix, launched yield farming and, the inflationary supply and all this stuff in early 2019, like March, April 2019. So it really did take a year. Right. So then the question of like, okay, well, what was it that allowed this kind of DeFi resurgence? And I think, it was all of those games. It was all of those like, kind of early PvP games that people, got excited about. And there was something interesting to pay attention to again. And it was within the context of a series of projects that were doing things that were actually functional. Compound, you could borrow stuff. Lend / Aave, you could borrow stuff. Maker, DAI was working, like it was scaling up. Like we hadn't yet hit any scaling walls. Like all of this stuff was actually working, but that wasn't enough to excite people. You also needed the like crazy, kind of incentive schemes to get people excited.
I would love to get like your perspective on like how far Synthetix has come over the years and what has perhaps been some of the challenges that haven't been possible or weren't able to be solved maybe until recently, if there are any.
I think in short, all of the challenges were not possible, right? And we're not even sure if they're possible yet. Like that's the fun thing about Synthetix, right? Is that like it is very much this like experimental concept, doing something that is incredibly hard, right? And every time we get close to finding out that some component is working, then we just push the envelope further. It's like, well, okay, let's try this, right? And I think that is one reason why Synthetix is kind of perpetually interesting, right? Even if it's not perpetually working or perpetually, generating revenue or doing whatever it's doing, like it is always interesting because, it's a set of really hard problems that we keep solving. And the other thing I think is that we rope other people into helping us solve them, right? Like you made that point about, yield farming. Like we roped Uniswap into that, right? Like we said, hey, Uniswap's here and we need liquidity as an on-ramp. Like rather than trying to do it ourselves, like let's bring Uniswap in. And, we were the largest, pool in Uniswap for like 9 months, right? Mm-hmm. Now that obviously paid off for a lot of people with the Uniswap airdrop. But things like that where, we take Uniswap or Chainlink or like some other protocol and say like, okay, let's work out a way to help, to bring that thing in to help us solve this problem. And so, it started off with like a really simple thing of we just want tokens that represent things that can't be on Ethereum. So Bitcoin, right? Gold, silver, oil, FX currencies, and USD is included in that, right? Like that's the primary one. Like USD is not a blockchain concept, right? USD is a real world concept, and we've tried all kinds of ways to bring USD onto the blockchain. That was the first Synthetix problem, even before it was Synthetix when it was Haven. So all of these problems have been like, okay, how do we do this? So it was like, all right, let's tokenize real world assets, like find a way to represent them on the blockchain, on Ethereum specifically. Then let's let people exchange those tokens, right? And like find a way to do that, right? And then let's find a way for people to get leverage. Let's find a way for people to, get margin trade. Let's find a way to like do a perpetual future. So it's always like kind of pushing the envelope, and as you push further and things get bigger, you find cracks in the old system. And you're like, oh, right. Okay. Actually, that doesn't work at scale. Like we can get to like same thing as Maker, right? Like DAI looked amazing the first 100 million DAI, right? It's like, this thing's going to scale to $1 trillion, right? Then you're like, oh, actually, no, there's a problem here. Like it's a finite capacity of ETH, lending, et cetera. And so, this is what all of DeFi is about. Just keep, pushing. You find a new problem and you're like, okay. And, it's one of the reasons why I guess, Synthetix also has struggled at times because when you're in the midst of the solution side of one of these hard problems, it can look like it just doesn't work, right? And it's really easy if you're a pessimistic person to be like, well, this thing's dumb, it's never going to work, right? The amount of people who said like, being the counterparty to all trades will never work, right? And like it didn't, when you looked at it back then, like it actually didn't work. You could see that fundamentally it didn't work. But conceptually, did it not work, right? And that's the thing that people, kind of pessimistically assume. But actually, conceptually, it does work when you have perpetual futures and you have, these funding rate mechanisms that kind of keep the skew in line and all of this stuff. And so suddenly we're now 2 years down the road. It's like, actually, maybe it does work. Holy shit, that would be crazy if that works. Yeah,
that's such a good point. I think you guys were critical in key pieces, right? When you think about like synthetic assets, you need a really good oracle. And I guess you were... you're probably one of the more important protocols for adopting Chainlink and the success that they've had. Then you realize, well, it's really expensive when you're doing a lot of frequent transactions in an L1 environment. So that I guess pushed you to then think about Optimism or an L2 solution like Optimism. I wonder, like, from your perspective, I guess you do have a really good vantage point on the infrastructure deficit or the state of the infrastructure of Ethereum and other L1s, which I know you've been really kind of critical on, or just have stayed away from them. And you've been pretty vocal on that. What's your latest kind of thinking on where is Ethereum today? You know, and the more concrete answer is people look at DeFi and say, okay, great, you built all this stuff, but there's like 10 users. Like, when are we going to actually see millions of users? And so I'm curious, when do you think that's going to happen?
Yeah, I mean, I don't want to jump ahead too far into the conversation because I know, we're going to talk about centralized, insanity later. So I'll park that for now, right? But I think, at a fundamental level, Ethereum is the original, rolling experiment, right? It's like, hey, I think, this Vitalik in 2013, I think we can build a thing that can execute, smart contracts on chain, right? And the amount of people who said like, absolutely, no, you can't, right? And certainly you can't do it that way. And certainly, this and certainly that. And, it's weird, right? How many people are in crypto who are super pessimistic, right? And I think it's incentives. The incentive to be pessimistic once you're in crypto and you've got something that's working. If you're a Bitcoin maxi and you're sitting there on your pile of digital gold, it's really easy to be like, no, nothing will work. You're all dumb. And like, look at this pile of digital gold. Everyone focus on that thing, right? That's my thing that I'm excited about. But when you're pessimist and you're just trying to, shoot holes in things, you're right most of the time. Because most things are really hard in crypto and most things are hard in startups and most things are hard in life and a lot of things fail. And so you're going to be right, but you're going to miss out on the fun of, hey, can this thing work and how do I get it and solve it? And so when you look at like Ethereum started off and, I remember sitting there in 2017 in Mexico and Vitalik was like, proof of stake, like, like the merge, it was just like, we're almost there, guys, 6 months and we're going to nail this, right? And obviously we all know that turned out to not be the case. And that's not a criticism of anyone. That's just the world, right? Like the world's fucking hard. And so when you set out to do really hard things, it takes a long time, right? And so, Ethereum scaling has taken way longer than we expected. And, I've said this many times that the fact that it took longer left a window of opportunity. We can't pick on some level when the cycles happen, right? And if a cycle starts to ramp up before you're ready, it's going to be bad for everyone. It's going to be a bad time for everyone, right? Because the market will fill the gap, right? So either you can turn up and be like, well, handwave, bullshit, whatever, it's going to be fine. Or you can be like, actually, we've still got really hard problems that we don't know how to solve because you're being honest about the problem. And someone else turns up and says, hey, like I've got a computer over here and it does 30,000 TPS, right? Like, and it's decentralized, don't look over, whatever, right? Like, and that person's going to win on some level, right? Because they're selling something that's really easy to kind of get for the average person who's turning up. And they're like, no, my thing's going to win. The computer in the back room is going to win, right? This Ethereum thing is nonsense. It's not going to work. And so I think that has been, an issue for Ethereum a couple times. And it's been an issue for DeFi and for Synthetix that like we weren't quite ready to scale up when the market started, ripping up and people absent a genuine solution will look for a, shitty, not real solution because they want something. They want an answer.
Mm-hmm. Ken, do you think that's just what ends up happening in all these crypto cycles though? Is like bear market, Ethereum wins, Ethereum things get built, ZK EVM, L2, those kind of things get built in the bear market. Bull market happens, value gets kind of attracted to those things in the beginning of a bull market, but in the latter half of a bull market, you get things like all L1s and like other ideas, and like that's the sexy thing that gets the attention. And then we have to get to the other side of the bull to realize that it was Ethereum all along, or do you think that changes in future cycles?
I think there have been a couple of reasons why the Alt L1s, if you look at the original Alt L1 thesis was like EOS, right? And like we left that door open. Like the amount of people that I had in like 2017, 2018 were like, you cannot believe how good EOS is. It is so amazing. And it's like,
I mean, I still remember you guys were like at some point were looking to like partner with them.
We were looking at going on there because we're like, everyone's saying to us this thing's amazing. Like maybe we're the idiots, right? Like we had so many people that were like, no, EOS, they're going. I was like, oh, okay. So we spent 6 months, JJ, who ran engineering, spent 6 months looking into it, and his conclusion was this is fucking nonsense. And this is a guy who had come from MongoDB and was the director of engineering there, and he's like, there's no engineers here, there's no structure, they don't like this is like Ethereum's bad. Don't get me wrong, Ethereum's bad, but this is nonsense, right? Like, and it was like all these people that were talking about how EOS was going to be this amazing thing. Either had no credibility because they hadn't looked into what it was or how it worked or how it was structured or whatever, but they were just talking their own bags, basically.
I mean, so like maybe let's put a pause on all this stuff. I'm just kind of curious to get your perspective. How does a company like Block One, the guys behind EOS, manage to raise $4 billion and from like really good investors for like this was going on for like a year? And like, how do they pull it off? I mean, to be fair, you guys probably marked the top of the ICO boom. Like you raised up, what is it, 260 million?
No, 30 million.
Oh, no,
30 million.
30 million. Sorry. Off by an order of magnitude. 30 million, but it was like the fastest sale, which was a lot. But like, how does EOS like raise this amount of money and no one ever like dig deep like you guys did?
Well, there's two schools of thought on that, right? Like one is they actually didn't. They structured their sale in a way that was, an ongoing year-long thing, right? And they were able to just recycle funds back into it and just buy more and more of their token, which meant that they controlled so much of the supply. They had a whole bunch of like civil wallets, and that theory's been around for a while. I don't know if you'll ever be able to disprove or prove that it was legit. But crypto being crypto, it wouldn't even surprise me if someone came out and said, actually, it was all legit. And we've got all the people, and we just got like a document that says, here's all the people, and this is how the money got in. Like, it wouldn't surprise me. It would not surprise me if it was totally illegitimate and it was just recycled funds and they really raised like 500 mil or whatever. But towards the end of the ICO boom in early 2018, Telegram raised 2 billion or something. Like, and I say this a lot, right? People are like, oh, 2 billion, like that's not that big of a deal. Because people, I think, actually get confused between raising $2 billion or raising $4 billion and a $4 billion valuation, right? Like those things are not the same thing. If you raised $4 billion, your valuation is like infinity, right? Like, it's like nonsense. Like no one's ever raised $4 billion in a round effort. Like it could be the largest raise in history. I don't know. Like I just can't imagine, outside of like some huge fund, right? Like someone for an actual thing that people are going to do, raising $4 billion, it's lunacy, right?
Yeah.
And so like, why does no one look at this stuff? Because of FOMO. Realistically, if you experiment with the mechanism for people to put money in, and there's FOMO. I remember being in like St. Moritz in 2018, and we're in this car and we're like coming back from like a dinner or whatever, and all of these VCs were just frothing over Telegram. And I remember sitting next to this guy and I was like, no, like guys, like what are you talking about? Like, even if this is amazing, how are you going to put $2 billion into it and have this make sense? Right. That's a different story because obviously, a lot of stuff's happened.
We've seen this movie play out before. Again and again.
Ken, can I get in though? Just one more point on these, like going back to what we were talking about earlier with the kind of like alternative ecosystems outside of ETH. Cause I think it's unfair to say that the things happening today are like EOS. And I know what you're saying, but I do think like it's unfair to compare something like the Cosmos ecosystem or Solana to an EOS.
100%. It's 10 times better.
Yeah, so I'm curious.
That's why I said, like, that was the original.
Right. I'm curious to just get your view on other ecosystems. Like, in your mental model for this world and in crypto, like, is there anything in these other ecosystems? And is there anything of interest there? Or you're like, look, the world will be built on ETH and that is it?
Look, there's a whole ecosystem of, people... not anymore, but like, if you look at even like phone OSs, right? Like Windows Phone, like, Microsoft was able to like pump enough money into that like people came and turned up and they're like, we're building exclusively for Windows Phone or, whatever. So like, there's always going to be activity there. The question is like, is it sustainable? Is it the best activity? Are the best people doing it? Like, does that make sense? Right. And so of course the Altair ones have gotten much better. No question. Like EOS was a dumpster fire. And like, Solana, like, they've got challenges or whatever. They're making trade-offs that I don't agree with, but like, it's a real thing. They've got engineers there. So, this is not to say that like, everything is EOS all over again. It's definitely better than that. But the reality is that by ETH building out in the open the way that it did, by being honest about the challenges, by being honest about, and like I said, the ETH community being honest about like, the issues that remain to be solved, right? It was so easy for someone to turn up and be like, oh, we don't have any issues remaining to be solved. We actually solved them last week. So, dump a bunch of money into us because we're about to just, run past Ethereum. And Ethereum's kind of like, there is this thing, if you go on crypto Twitter, especially in the bull market, where like Ethereum people are losing their minds. They're like, why are we being honest with people? Like, how can you compete when you're being honest? And it's like, you just compete in the long term. And it's just one cycle and you just let it go. So when the guy's like, no, like we solved that technical problem last week and here's how we solved it. And just, look over there, right? Like it can be frustrating, but you just have to accept that that's just the market. The market's going to do what it's going to do.
Yeah. So I want to transition a little bit because, other than building Synthetix, you're also a very prolific investor, certainly things that you want to see built. So like, what is it that you're most excited about, in crypto right now? Like things that perhaps haven't worked, but will work, or they thematically you're really excited about that you think are really going to take off in the next cycle?
I think this is the kind of point of all of that stuff, what I'm sort of leading up to is that like Ethereum is basically there now, right? Like at least to the extent that we can see, like we have actually solved the problems, right? Like even proof of stake, there was a long time where it was like, oh, proof of stake is not a real thing. It's never going to happen, right? Even though there were other proof of stake, systems that existed, like the idea of Ethereum transitioning from proof of work to proof of stake, people were just like, no, it can't happen, right? Easy to sit there and be a pessimist and shoot holes in that, but the reality is that it has happened. And, then it's like, okay, we'll move on to like the merge is never going to happen. And now it's like withdrawals are never going to, the next thing is never going to happen, but it inevitably does. Mm-hmm. And it seems to me like Ethereum, with the current setup that it has, with multi-client teams, with, really good incentives to work hard, like it's working better than it ever has. Like the decentralized coordination component of Ethereum is 10 times better than it was in 2017. It just is. Like it's just, empirically obvious, right? And so now the question is, okay, like can we keep this momentum as the Ethereum ecosystem into the inevitable next bull market? And my sense is yes. And so like, to go back to your question, like what's the difference? Do we always end up with this like frothy nonsense at the top? Yes, there will absolutely be that. But if you give people a reason to go to BSC because the transactions are 1,000 times cheaper, right? People will do it, right? If you go, if you give people a reason to go somewhere else in the middle of a bull market, they will. I think we are the closest we've ever been to not giving people a reason to leave Ethereum this cycle. I think there will be, really, there's always a reason. One of the reasons is that if you can go and buy a thing for 1 cent and pump it to, $1, right? Like that's a reason. So that reason will never go away. So there will always be frothy nonsense. But the technical underlying architectural reasons and like user facing reasons, I think we're close to removing that reason for people to go somewhere else.
And what about the, Ken, were you in Denver at ETH Denver? Or did you?
No, I wasn't. No, I haven't been traveling much.
I talked to Santi about this the other day, but a lot of the discussion in crypto today is very hardcore infrastructure still. So if you looked at like all the folks in Denver, it was it's like very little of the zeitgeist is dedicated to things that people want to use. It was like ZK EVMs and like wallet infrastructure and stuff like that, different staking mechanisms. When does that shift over to things that people want to use? Or are we multiple cycles away from that?
No, I think we've already got the stuff that people want to use. People want to use derivatives. They want to trade. Like if we look at the main use case of crypto, it's, people want to trade crypto, right? Like that's the main use case. The other use cases I think will kind of emerge out of that when that's solved, right? When we can genuinely do that in a decentralized way. And that's when DeFi will win, right? And that, again, not to like jump ahead to the conversation, but I think that's where we're close to doing. Now, why is everyone focused on infrastructure? Because all of a sudden infrastructure is working for the first fucking time. And so people are like, oh, wow, this is a thing that actually, like before they were like, oh, maybe we shouldn't work on infrastructure because, some guy with 500,000 followers says, Ethereum's dead and, infrastructure is pointless, right? And now people are like, oh, wait a second, like infrastructure is a way, there's still unsolved problems here that we can solve. And there are, but the gap is getting smaller, I think, right? We've got an ecosystem of L2s now. We've got, there's stuff that's kind of, filling those gaps that used to exist within the Ethereum ecosystem. And so it will get harder, but there's no question that like wallet infrastructure, there's a whole bunch of unsolved problems still.
Yeah. Like on that point, you could argue that like we're now in an infrastructure surplus point where like, like transactions are now super cheap on Ethereum. And there was a time where we complained that it cost a car and a half to like do one transaction. And like L2 fee, like Arbitrum, Optimism combined, like you could argue there's so much capacity. The question is like, again, like what is it going to take to onboard millions and millions of users? I know it's like a loaded question because you can go in so many directions, but like, what is the first thing that like comes to mind as like the main challenge that we could be focused on as a community?
It's an interesting question because even still, I say we have working L2s, right? We don't really have working L2s. Now I'm going to put my honesty hat on, right? And say like, we don't, and that's going to leave the door open for some fucking idiot to waltz in, I guarantee you, in, 2024 and be like, I've got a working L2. The sequencer's decentralized, and
like fraud proof sequencer.
They're gonna just say like we've got all the problems. They're all solved in the back room. You can't go back there right now, but like trust me, they're all solved. And
aren't you just describing sidechains here, sir?
Yeah,
sorry.
Yes, but they'll reinvent themselves. Sidechains will. Listen. Like I promise you right now,
I'm gonna mute
sidechains will reinvent themselves as like some other thing. There'll be some memeable name that they've like got that's like slightly better than L2s, and they'll be raising $100 million fucking dollars. I promise you this will happen in 2024. And so, to go back, we don't have decentralized sequencers yet, right? That's going to be a hard problem to solve, right? We don't have, fault proofs, right? Or we do, but there's still, issues with them or whatever. We don't even have an optimized data availability layer in L1 to the L2s, right? Like that's still, there's still work to happen there, right? The ZIPs coming that will make that even better, right? There's fundamental architectural changes that need to happen in the L2s. So we say we've got working L2s, but we don't really. We have significant scaling still left in the current L2s that we're working on. And yet I would say if 5 million people turned up, in a month's time, we would accommodate them so much more effectively than we did last cycle.
All right, quick break from the show. There is this kind of overused cliche saying in crypto, but it's true. Bear markets are building, and everyone tells you that and everyone knows it. What people don't know is that if you're building apps in crypto and building apps in Web3 without using Quicknode, you are building on hard mode. So Quicknode is this amazing blockchain development platform. It reduces costs, streamlines the time to market for your app, and it offers consistent performance at scale. For folks that have built apps, you will know that there are a couple key points here. One, Quicknode offers unlimited endpoints across 18 different chains and 35 different networks. They have response times that are 2.5 times faster than any of their competitors, 99.99% uptime, and a dedicated 24/7 customer support team. If you've been listening to Empire for a while, you might know that I am no GigaBrain developer, but I do know a lot of devs and a lot of great product teams at other places. So when I see Coinbase and Twitter and Adobe and OpenSea and Dune Analytics all leveraging and trusting Quicknode to power their business, that's when we get excited, and that's when we want to partner with them. They're the best solution for any leading crypto and Web3 company that is seeking an end-to-end blockchain development platform right out of the box. So my message to you, get off hard mode, let Quicknode handle the blockchain infrastructure, let Quicknode handle the security, let Quicknode handle the performance while you focus on building beautiful products for your users. Visit quicknode.com, super easy. You can use code EMPIRE. You'll get a free month on their build plan. So don't forget to use code EMPIRE. Santi and I got to get credit for this one so they know that we sent you, and you will get a first month free. Hope you guys enjoy it. All right, folks, it is time to talk about one of my and a lot of your favorite DeFi protocols, Synthetix. Synthetix has been pushing the limit in DeFi innovation since 2017 and has just started its most exciting transition yet with Synthetix v3. With Synthetix v3, any protocol can now tap into Synthetix liquidity to bootstrap derivatives markets. The transition has already started with Synthetix Perps. Synthetix Perps taps into Synthetix's liquidity layer and is a new primitive that developers can leverage to launch DeFi derivatives. The Perps product has been going incredibly well so far. Hopefully you've seen it. It's had some great traction, hitting 500 million in daily volume this March. We know that liquidity rules DeFi, and Synthetix is becoming the modular liquidity layer for DeFi derivatives. As a trader, you can trade Synthetix Perps with low fees in over 20 different markets at Quenta.io, Decentrix.com, and Polynomial.fi. And this opportunity set keeps growing with 10 new partners in the pipeline ready to launch integrations on top of Synthetix, including front ends, structured products, and institutional offerings. The team gave me a sneak peek of all this stuff. It's really cool. Would really recommend you check out Synthetix.io/perps to learn more. And if you're looking to build on Synthetix, hop into their Discord server, reach out to the team directly. Make sure to tell them that Empire and Santi and Yano sent you. Again, Synthetix.io/perps. You can also hop into the Discord server and reach out to the team directly.
Transitioning a little bit into kind of what needs to be built. The first obvious thing is there's been a lot of wreckage in the centralized world. Partially because, not because it wasn't a good business model, it's just because of terrible mismanagement. Like it's like people that have no experience in finance or risk management just kind of blew something that was actually pretty good. Do you think that all of that eventually transitions into a decentralized context now that we have all this infrastructure?
Yeah. So, it comes back to, in my mind, a very simple thing, right? The market will solve the problem. So the market will solve the problem. It will solve it in the most kind of efficient way that it can, right? Like that's what markets do, right? And so if the most efficient way is to just centralize everything, right? And take all of the benefits of the technology and remove them, right? Then the market will do that. And every single time we've gotten into a bull market, we've been forced into that because we haven't had the decentralized technology. We've had a little bit. And so people, will kind of play in the decentralized land a little bit, right? But the primary demand in a bull market is trading crypto. That's where the demand is going to come from, right? And so if you can't trade crypto in a decentralized fashion, like you couldn't in 2017, so 0% of, activity happen. I mean, that's not like either delta or whatever, like 0.001%, right? Of transactions happened on decentralized exchanges, right? I saw a chart a couple days ago that says it's like 15% or 20% or something like that of exchange activities happening on decentralized exchanges now. I think Hayden posted about Uniswap and a bunch of like that's crazy. Like there were people that said that it will never get above 1%. It just isn't even possible that you can compete, right? And so I do think that we are going to see people are going to want to trade crypto. Again, we'll have a mass influx of people who want to trade crypto. And we are in a position now where the way that they typically want to trade crypto over time is like leverage and margin, et cetera. They want, like BitMEX invented the perpetual future. And that's the thing that is the most efficient way to, express your desire to trade crypto. I don't think that's going to change in the near term. And therefore we need decentralized versions of that. We weren't even close, in 2020, right? Mm-hmm. No one was even close.
Yeah.
We're pretty close now. It feels like we're pretty close to that. I think by the time there's a lot of demand, we'll be very close. And the key thing is that you need to have multiple solutions for something. Right. Too many times in crypto, especially in decentralized finance, we've only had like one, maybe two options. And I think when you have one or two options in a decentralized solution and then like 50 options that are centralized, it's really hard to compete, even if the two are quite good. So that's one of the things. You need like a flourishing ecosystem of options for people to use.
Well, speaking of options, it does feel like that is dwindling down in the centralized land. There's certainly more regulation coming in the US, like on-ramps, liquidity is really dried up. You could argue potentially Coinbase as a viable business could be impaired. What does that mean for crypto as a, like, especially decentralized finance?
So I think it means probably a couple of things. One, the regulatory arbitrage payoff increases, right? So, finding some jurisdiction, some banana republic or something that you can, turn up and buy out the entire government and set up your crypto, paradise of centralization there, right? That payoff will be much higher than it was even last cycle, right? Because the delta between, Coinbase or Kraken or like an exchange that's trying to do the right thing, that's in a sane-ish jurisdiction, right? And someplace out in the asteroids somewhere, right? Out in space is going to be significant, right? Because they're just going to be able to do things that those other exchanges won't be able to do, right? They're going to be really fighting with both hands tied behind their back. But we have an alternative, which is decentralized finance, right? Mm-hmm. Which is its own version of regulatory arbitrage right now. And so the delta of using a decentralized exchange that can give you everything you want as a user versus using a centralized exchange is going to compress in a way that it never has, right? And so I think we could actually see like a viable ecosystem of exchanges, decentralized exchanges.
Yeah, I think all too many times like there's some regulatory action, and then crypto gets bundled all together, right? And there's not enough nuance. I do think that there's understanding at the working group level of these agencies, but sometimes the press mainstream just sort of like looks at it, it's like all of it's bad, and unfortunately that's kind of the state we're in so early. But like if the regulator approaches you, tries to understand what Synthetix does, say the CFTC or whatever, and like if you look at like the issues that they're bringing up against some of these centralized players, you could argue, and I'm curious if you agree with this, that like why wouldn't you want to have a totally transparent system that the counterparty risk is very well understood, the level of permissions that you give a smart contract or whatever counterparty are very well defined, and so you don't really necessarily have these issues that have existed in traditional finance for so long, which are largely a result of there's no transparency. Just people don't. There's just sort of this like trust us, I promise, but don't look at the charts. Just today, for instance, as an anecdote, you can't like CNBC. You can't now look at credit default swaps for most banks. So how crazy is that? So you try to look at the CDS for Bank of America, no longer there, folks. Turn away, go elsewhere, go for a jog. Like, you know what I mean? Like, so anyways, back to the serious question. Do you think that we'll ever get to a state where like a regulator appreciates that? Do you think that they care? I'm just trying to understand how perhaps the end game of DeFi, can DeFi like work its way into the traditional system, which is just a clusterfuck?
So I've thought about this a lot, and I've talked to some other founders of DeFi projects, and you kind of scratch your head a little bit, and you're like, okay, well, these are obviously competent people, right? Like, it's hard to get into a position of power in the world, right? Like, there's this game where you have to beat other people. Now, maybe you're optimizing for the wrong qualities or skills in a person, right? But it's not easy to become, the head of the CFTC, right? Or, the head of the SEC. Like, that's not an easy thing. You can't just turn up and be like, hey, I'm Jimmy and I'm going to run this place, right? It takes a lot of work and time and effort. And so then you go, okay, well, like, these are obviously competent people. They're obviously intelligent people. Where is the misalignment of incentive? And I think the answer is that they are, to go back to this like pessimism thing, they're skewed, maybe pessimistic, right? They're like, we have a solution to this problem, right? The solution is oversight. That's the solution, right? Like, we don't need to remove the need for oversight. We've got oversight. Look at rules, and we've got people that can go in and look at your manila folders and go through them and highlight them and figure it out. It takes 10 years and it's slow and clunky and allows for a bunch of fraud, but we've got that system, right? And they're just pessimistic at a fundamental level that you can solve this with technology. That like oversight can be like removed as a necessity because you can have things that are like transparent by default. So I think if you talk to Gensler, he would just say like, this is like a kind of misdirection where you're building something that won't give us this thing because there's a fundamental level of pessimism that you're not going to get this oversight. And by saying you're going to give people oversight, you're finding a way to like kind of skirt around our oversight, which is the only way that the world can be sure that this thing works.
Mm-hmm.
And I think, everyone in crypto, or at least a lot of us in crypto who believe in the technology and understand, why it's a better solution to this coordination problem of you either need oversight or you need transparency. I think we believe that the world will get this eventually, right? Like this is not like we will win this argument. But at the moment, unfortunately, the people you're trying to convince are people that have been playing this game of I want to be the head of the SEC for who knows 30 years, right? And like the start of that career of I want to be the head of the SEC, there's no such thing as transparency, right? Like everyone's a bad actor and you got to have oversight and whatever. So like that guy needs to die basically, right? Before, this is like the structure of scientific revolutions, right? Like this idea that like the people who are in charge now grew up in a paradigm that just doesn't comprehend what we're trying to do. And, when all of the regulators, who are 70, 80 years old, kick the bucket, then, some new person turns up who knew that crypto was a thing the whole time and they get it. And they're like, oh, okay, this is how we do.
Innovation happens one death at a time, right? So,
exactly. That's such a good point. I feel like regulators by default are pessimistic because, in a non-transparent financial system with like you have to kind of assume everyone's like evil. Brings me back to something you said earlier about efficiency, that ultimately consumers value efficiency and the market sort of like that's how you win the market. Do you think that we're undergoing sort of a paradigm shift with this bank runs that for now people kind of really wake up to this idea of like, oh, I actually now understand what happens when I deposit into a bank? And then that eventually, no? Do you think is that too optimistic?
This is where I'm pessimistic, right? Like I'm pessimistic that the average person, that we're going to be able to educate everyone into caring enough about what we care about, right? That they will be like, oh, I get now why this is a good thing, right? Like, there's a battle in the market, and the battle in the market is like you need to be the most efficient, you need to be, the cheapest, best solution or whatever. You need to be 10x better than the incumbent, and then people will use you. People are never going to care how you did that. Like a small group of enthusiasts will care. The average person doesn't care. And so, people right now are all caught up about bank runs, in 2 weeks time, it'll be, whatever, something
else.
Okay. So Kain, what will make DeFi a 10x better experience than opening up a Robinhood app and trading?
So this is something where I think we in crypto, including myself, were overly optimistic about.
Yeah.
I tweeted about this a little while ago that like, if you want to decentralize the NASDAQ, doing it as this like guerrilla warfare is just not going to work, right? I think I kind of thought like maybe it was worth a try, right? Like, let's see if maybe we can like go and decentralize the NASDAQ without them noticing, right? I just don't think that's a thing, really. I think that what we need to do is decentralize the things that we can and show that the delta between the things that we can decentralize and the stuff that's not decentralized. And, this has kind of crept into the zeitgeist a little bit. There are people like, wait a second, do we really need to shut off trading, every day? Like, what if we had continuous trading? Or like, do we really need like 3-day settlement? What if we had 1-day settlement? So like, when you put some market pressure on something, all of a sudden people are like, oh, actually, maybe there is a better way of doing it, right? It's going to take a while, I think, before we decentralize the NASDAQ. But I think we can get efficient decentralized trading of all of the crypto assets. Like, let's solve that problem first. And then we can start talking about equities and things like that.
I want to get your take on stablecoins. I know Synthetix has its own SUSD. It's been around for a while. And that feels like the Achilles heel here of DeFi. Like, talk about efficiency. Like, people don't care. They'll just use Tether and USDC because they work great and they have the best liquidity. What's your vision for stablecoins?
There is a theory out there, right, that was kind of, I think probably Arthur Hayes was the first one to espouse this, that like there is a better decentralized stablecoin than what we've got now, right? Which is basically this like basis trade, perpetual future backed, Bitcoin. I mean, in this case, Bitcoin, right? He still hasn't quite got off the Bitcoin maxi train yet, but we'll get him there eventually. And he's slowly migrating. to the promised land. But the idea is like, okay, use this asset, and it's the most deeply liquid 24/7 market, and like basically construct a stable coin that uses that as its backing. There's a couple of issues with that, right? One is that Bitcoin isn't natively on the Ethereum blockchain, and obviously the stablecoin needs to be on the Ethereum blockchain. So you've got a couple of issues there. So I think his solution is like you go and look at like centralized exchanges, et cetera. Like again, he's not quite like we can't be looking at centralized exchanges as a way to build a decentralized stablecoin, right? So the alternative is, okay, we'll get ETH perpetual futures, right? Perpetual futures that are running on decentralized exchanges on ETH natively, and use them as the underlying collateral, have this like basis trade. That to me makes a lot more sense. We're not quite there yet. We're getting close. Now, whether that will even work is kind of an open question. Like, is it even a thing that's viable? Like, but it may be, and we have the technology to test it now. I think we're getting close to being able to test it. I think one of the other potential avenues is, like just a central bank digital currency comes along, right? Maybe for, like Australia is even playing around with this, right? So like it's, I've even like kind of thought about like, okay, what if you use something like that? Which kind of, it's not, Australia's not as neutral as say like Switzerland, but, if it was like, a CBDC launch, for CHF or whatever, but like, you could potentially use that as a way of collateralizing something, provided that like the issuer was credibly neutral and it's like backed by a central bank. Because like fundamentally, what do people want? What are people worried about now in their stablecoins? They're worried about like how safe is the collateral, right? And a central bank digital currency is fairly safe. It's certainly safer than where the money is with Tether or Circle, right? Right now, you would say. Because it's issued by a central bank, right? Like it's narrow banking with central bank. Like I think the US isn't quite there yet, but like it's possible that, some smaller nations that are still in the G20 or whatever could start playing around with this stuff, and that could end up being like pretty useful collateral. So there's still experiments to be run here on like how do we collateralize a stablecoin.
Santi, I know you have a couple other questions. Kain, I want to get your take on. I saw you tweet out about why FTX is the greatest thing for DeFi. So I don't know if you you mentioned these two words, centralized insanity, earlier. I don't know if you covered all the things you wanted to mention earlier, but I did just want to dig into that a little more with you.
Well, I think there's two things, right? Every cycle, people, again, this is default pessimism, right? People are like, well, no one's going to be able to, supplant X, like Polonia X, right? Yeah. Like in 2016 or whatever, right? Like people like Polo's like dominant, and okay, Coinbase has like the US market, or blah blah blah, right? And then it was like and then Binance kind of came and destroyed everyone, right? And people were like, how is that possible that Binance in like 11 months or whatever could become the dominant exchange? It's like, well, they just listed every shitcoin, right? Like that's a very obvious playbook, right? Like they did things that no one else is willing to do, and that people want to trade, and they'll go, they'll eventually migrate to the place which is letting them trade, the stuff that they want to be able to trade. But then I remember like vividly in 2018, people were like, well, that's the last time that anyone could ever supplant, become the biggest exchange. Like Binance is it, and it will be to the end of time, right? And then, this like scrappy little FTX thing pops up, right? And people are like, okay, now they've got like perpetual futures and they've got all this stuff, and they started like taking on like a whole bunch of things, right? And gave people leverage or whatever. Now, who knows how much of the customer acquisition costs were like, subsidized by the customer's own money. We may never know the answer to that, right? Like, if you're just losing money constantly to people, like they're probably going to migrate to your exchange because everyone's going to be like, this is the greatest place to trade ever, right? So, we don't really know how much Alameda just hemorrhaging money to all the traders on FTX was a driver of growth. But the reality is that we are now in a situation where there isn't really a dominant exchange. Like there's Binance, right? But I mean, Binance has got their own problems, right? But Binance has already been beaten by the last guy, but then the last guy blew up. And so now it's like, well, we know Binance can be beaten, right? So then it's a question of like, who can beat Binance? Is it going to be a centralized exchange? Well, maybe Binance can be beaten by a decentralized exchange or a group of decentralized exchanges.
Or by the regulator.
Or by the regulator, or by a combination.
Sorry, speaking of that, what do you think of Base?
Yeah, it's a good question. I think Base is interesting. You know, when we talk about ecosystems, right, we're going to have an ecosystem of L2s, right? And Base will be in that ecosystem now, right? And Base has a lot of, just to be clear, like Coinbase is L2 that's based on the OP stack, right? Like they've got a lot of customers, right? You know, they just do. Taking the best tech stack, arguably, right, for an L2 and jamming a bunch of customers in there is definitely a playbook that, you know, could work really effectively, right? Then it's a question, you know, I guess from the optimism side of like, how effective is the super chain concept of like a chain of chains where, you know, everything kind of rolls down. Obviously, you know, Base has talked about not launching their own token. You know, we've heard that story a million times.
Themselves.
Let's see. Themselves. Yeah, exactly. Yeah. So, you know, so I think we need to take that with a grain of salt on some level. But, you know, because I still believe that, you know, absent a token, it's hard to coordinate something in a centralized way. And, you know, Coinbase may not have figured that out yet, but whatever, right? Like, you know, we'll see what happens there. And so, you know, you now have like 3 or 4 different L2s, right? And then, you know, there's ZK stuff that's coming around. Like, there's a whole bunch of things that are ready to accommodate a lot of customers, and one of them already has a bunch of customers. It is the most, you know, kind of viable customer acquisition strategy to just transfer them from your old tech to your new tech, right? Without, you know, and hopefully you don't lose too many of them on the way over.
Yeah. Do you think that something like that is what sparks the next bull run, as Compound liquidity mining program did for DeFi Summer?
It certainly seems like it could be. You know, of all the things that could spark that, right? You know, just dumping whatever, you know, tens of millions of customers into an L2 and being like, hey, look at this thing. Isn't this cool? Right. You know, I think that could work. But to go back to, you know, the earlier question about like infrastructure, right? That only works if you've got like solid wallet infrastructure and, you know, ease of use of like all these different things, like, and, you know, socialized recovery. And now maybe Base, because it comes from a centralized place and it's got KYC and has customer information, like maybe there'll be some ways that can like be a hybrid, you know, certainly a hybrid centralized, decentralized network, right, has some advantages. We saw that with BSC, right? You know, so Base will have some advantages, I would say, right? That, you know, it's got user information, it's got some stuff that it can do. So it's going to be a very interesting experiment for sure.
Okay, and last time you were on Empire 6 months ago, we started the conversation by talking about like in each cycle there's a different metric that people care about. So in 2017 the metric was amount of money that you raised. In 2020 it was TVL, and your thesis at least 6-7 months ago was in the next cycle it'll be cash flow that the protocol is actually spitting off. What do you still think that 7 months later?
Yeah, absolutely. I think, you know, that's only been bedded down more, right? Like you look at, you know, we had crypto fees back then. DeFi Llama now has, you know, their own version of that. There's other people that are building it. I do think that like DeFi Llama, you know, started as like a you know, sort of competitor to DeFi Pulse, right? Which was a TVL dashboard. I do think a dashboard that just focuses on that one metric, you know, is kind of a shelling point, and people kind of go to it. And now we're in this weird thing where like there's crypto fees, but DeFi Llama is better. It's obviously a harder thing to track than just TVL. Like TVL, you just look at, you know, do a contract call and it's just there, right? So there's some nuance about how you count things. So it's not as easy. It's a little bit more of a sophisticated metric. But I do think that people are coming around to this idea and sort of seeing it as a place to compete.
Yeah. Do you ever think about optimizing, like when you and the team and community are building Synthetix and folks are building on top, like how much does that sort of belief about what folks will value in the future dictate how you build the product?
I think that revenue is the real metric, right? This is the difference. Like, this is where we're kind of getting to a point where like it's no longer nonsense, right? Like TVL was kind of nonsensical, right? But it was the only thing we could track. There wasn't anything else to track. Now it's like, well, we can track revenue. Like, that's the end game, right? You need to be able to generate revenue, but until you can generate revenue, when no one's generating revenue, you're just going to come up with other metrics to compete with each other, right? But now it's like, no, like, if you hold this token, you get this revenue.
How do you think about? Go ahead.
That's it.
I was going to say, I mean, as someone who thinks about like at Blockworks building dashboards that could track fees and things like that, like one thing that we're talking about internally is, not all revenue is treated equally, just like not all TVL is treated equally. So like, using Uniswap revenue, for example, like, do you count all of Uniswap's revenue? Do you only count revenue that they eventually probably send back to token holders, or back to the protocol? Like, how do you think about revenue across, different protocols and different projects?
This is where I think, the nuance comes in, right? Because it's real, right? You don't need nuance when it's a nonsensical game that everyone's playing against each other, right? Like, and even within TBL, there was a little bit of, but really it was just like how many assets are in there, right? Maybe there was like take out the token, the internal token of the project, like carve that out. Maybe that was the only carve out of like, oh, well, let's not count the project's token. Let's only count like ETH. But that didn't even really work that well, right? Like, I remember DeFi Pulse had like just show me like the ETH amount that's locked. And everyone's like, fuck, I don't care about that. I want to see the top line number, right? Like, whoever has 10 billion or whatever. So, this is a much more nuanced question, and it'll be up to the dashboards, I guess, probably to set those expectations, right? And try and be neutral. And again, it's now like a market problem, right? Like, if one of the dashboards makes a bad decision and starts tracking something that's really gameable, and everyone games it and they don't bother to try and fix that, then someone else will probably pop up and be like, well, I'm going to carve out that gamed metric because this is showing the wrong thing. And then now you got some competition. But competition in crypto is still hideously inefficient, right? So how long does that take before someone steps up and says, well, wait a second, no, this is not right. Let's fix this. It could take a while.
I mean, this sort of assumes that, people even care or value these things on cash flow. Like, I mean, it took like 100 years to develop formal valuation methodologies for stocks. It's probably crazy to think that crypto is trading on any substance of fundamentals.
But even in traditional capital markets, like outside of crypto, we're on the other side of this big VC bubble bursting. And folks, even if you look at those kind of very hyped up venture-backed tech companies, the Ubers and Lyfts of the world, they are, if you look at what their board is telling them to do, they're telling them to race towards profitability too. I don't think it's just a crypto thing.
No.
So sorry, just to be clear, I think to Sandy's point, and this is, I think it's not like we're going to value these things on cash flow. We're going to pick winners based on cash flow and revenue, right? The price to earnings is going to be like nonsensical, right? Like, there's no question there, right? It's it's going to be like 1,000x versus 950x or something like that, right? PE. So or price of sales, depending on how you want it, whatever, right? But like it's going to be the winners will be determined by who has the most revenue, right? And that's where there is nuance, because Uniswap has the most revenue, or did for a while, right? Had the most revenue of a DeFi protocol, right? I think there's some argument about like OP, where does that fit in the network, et cetera. But Uniswap for a long time, but it has zero revenue for token holders, right? So do you show zero, or do you show $3 million a day, or whatever? Like, which one is it?
And feel free to answer this question or not, but do you think that we've been in this, like specifically on the Uni token, like fee switch or not? It's been heavily discussed among particularly large holders, which are venture backed, like our VCs based in the US. Turning on a fee has implications that a crypto lawyer might say, wait a minute, that might then look like a security, which has always been like this problem in crypto. We have done a lot of architectural choices and trade-offs because of this security thing. I'm curious to get your opinion on that. Scenario one, we continue on this path. At some point, we get some regulatory policy, whatnot. Or option B, we get clarity, say all of these things are securities. You got to register. You got to do information disclosures. Is that scenario terribly bad, where crypto no longer becomes a viable thing? Like, a lot of startups just die because token issuers like just can't issue a token because it's heavily problematic?
I think there's an option C, right? Which is that, for the foreseeable future, regulators do not provide clarity, right? But also say, they're already kind of providing clarity. They're saying like, you should all register, right? Yet no one's, scrambling to register, right? And the reason why, not because everyone's sitting here saying, no, we are securities, we're just, thumbing our nose at the law and saying we're not going to register, it's because there's a fundamental ideological disagreement about what these things are, right? And then there's a question of like, okay, so who registers? In the case of Synthetix, there's no entities, right? There's a DAO, token holders vote people in. Like, the Synthetix governance is one of the most decentralized governance frameworks that exist, right? Like, it's not even governance theater. Like, there's still components which are a bit centralized in terms of like deployments and stuff, but in terms of how decisions are made, it's about as decentralized as you can get. And so the question is like, who registers? Who even can decide to register? What does that even look like? And I think, the onus is kind of on the regulator to say, if there is a thing that looks like this, and we're saying register, and it is fundamentally incompatible with the thing, something's broken here. Like, you need to like come up with a new definition or a new, pathway for that thing to do the thing that you want it to do, right? There's no entity, there's no corporation, in Delaware that's saying, yep, it's us, we're going to register this thing, and it's our efforts that are generating, profit for, token holders or whatever. Like, that doesn't exist in a lot of these. It does in some cases, but it doesn't in a lot of cases. And so I think that could, if that really, starts to accelerate, which I think it is, right? It pushes people more towards option C, which is look more like a thing that doesn't have the ability to register than look like a thing that's refusing to register in spite of the pressure.
Kain, as we think about the next bull market, can we just tie this all back to Synthetix actually? So you guys have, I think Santi and I have both, Santi even more intimately, but like we've watched your evolution from like this application that started with a focus on spot, Synthetix, and then now is really like this infrastructure liquidity layer. And we've, Blockworks folks have gotten pretty close to like Quenta and Lyra and D-Hedge and all these folks who have leveraged what you guys have built and have built these really successful applications on top. Can you talk about V3 a little bit? And I've got this Dune dashboard up called Synthetix Stats, and the numbers are just ripping, right? It was like 100 million on March 9th, 500 million on March 17th. I don't know if this is tied in at all with like the banking crisis, but the number, or maybe it's just with the new launch of V3 and stuff like that, but of V2. But anyways, tell me about V3 and what's coming.
Yeah, so there's kind of like versions within versions, and Synthetix, like Ethereum, probably doesn't do a great job of versioning or like calling things what they are or whatever. It's all a bit confusing and convoluted. But we have the Perps product, version 1 of which was pretty useless, right? Which I will put my hand up and say, I had a lot of say in how that was designed. And then we have V2, which is actually quite useful and kind of does the thing that it's supposed to do, which launched recently. But Perps V2 is just a product that's built on the Synthetix liquidity engine, if you will, right? It's just an internal product that's developed in the same way that like Lyra taps into Synthetix liquidity or, whoever, right? They like all of these different things. Like, it's just a thing that was built by Synthetix to tap into the liquidity. And that's the old liquidity, right? Like, that's the existing Synthetix system that's been around since, late 2018 or whatever. Synthetix V3 is basically a complete redesign of that liquidity engine. And that redesign will allow for all of these projects that are already pulling that liquidity to do it much more efficiently. There's a whole bunch of advantages. There's, it's a reimagining of how a liquidity layer could function, right? Now, alongside that, there's going to be improvements to the Perps product, which again is just a product that's bolted onto that liquidity layer. Like, they're kind of independent. Someone could turn up tomorrow, really, and build their own implementation of Perps, right? And bolt it onto the liquidity layer because it's permissionless, right? And in fact, I expect that something like that may happen, right? But from the Synthetix token holders perspective, that's great. Like, what you want is more things bolting onto this liquidity layer because the liquidity layer is what is generating the fees, right? That's the thing that charges for access to itself, right? And Synthetix holders are the ones that back that, and they're the ones that get the benefit from it.
Nice. What's the toughest part about this? Getting folks to build on top, or getting the traders?
I think, historically it's been getting a product that works, right? Like, we've had multiple iterations that just didn't work or had like significant flaws. And so when you have a product that has flaws, typically what we found, I think, is in practice, the flaws mean that it can't scale, right? Like that's what I think, like you can kind of do it for a while and it works. And, until someone notices the flaw and they really try and like scale it up and they start exploiting it. So like Oracle latency was a thing that, Oracle latency existed for years, right? And we all just kind of like looked the other way and just, used it or whatever. And then, one day someone turned up and they're like, hey, I could maybe exploit this Oracle latency. And then, a whole bunch of bad things that happened, right? In like, July 2019 or whatever, and kind of kept happening, right? And we've seen Oracle latency exploited in multiple protocols. And so then you go, okay, well now we're going to, change the way the oracles work or whatever. So like there's this iterative game of like, you do a thing and there's some, inefficiencies and then people start exploiting those inefficiencies and then you fix them and then you go and fix a different part of it. So we're at a point now where I think we've fixed a lot of the inefficiencies and Oracle latency isn't an issue. Probably the biggest issue for Synthetix right now, I would say, is like liquidity is an issue.
Yeah.
We don't have sufficient liquidity, 50 million SUSD and I think 100 million total synths is not enough to be the dominant, perp trading venue for the world, right? Like we need to scale up significantly.
Have you guys ever thought about launching your own chain? After looking at like what DYDX is doing, local fee markets, capture the MEV, try to get closer to the user. Is that on your roadmap at all?
We definitely thought about it. There was that, the parachain thing,
right.
Like I was at, a talk that, I think when Polkadot launched or around about the time, when Gavin was launching Polkadot, and it was like, okay, parachains, this is interesting. Now it hasn't gone anywhere for a number of reasons, right? The biggest downside to an app chain in my mind is composability, right? People really did not understand the value of composability. I think even early DeFi people didn't really understand the value of composability, right? It turns out it's significantly more valuable than it even seems like it should be on paper. And I think we valued it highly, but just not as highly as we should have. And so the question for, I guess, Optimism, for example, with the super chain idea, right? And, with Base and maybe other chains that are like connected to the super chain is how do we ensure composability? Or how do we kind of get something that's close or approximates composability? Because if you break composability, what we've seen is that is a significant impediment to utility for users.
For someone listening who doesn't understand why composability is so important, what is that? Why?
So the interesting thing, and I said this about DYDX, right? Like DYDX had the luxury of actually camping out and building their own little silo, right? It was almost like a decentralized, centralized thing, right? It was like DCFi or something like that, right? Instead of CDFi or whatever. And it was like, well, we're decentralized, we're non-custodial, but we're running on a computer in someone's house, right? And the worst case is if someone shuts down the computer, like you can get your funds out, it'll take a while. You got to send a letter to the house and then whatever, right? It was this whole convoluted scheme. No one knew how to like write the language that the letter could be written. But just ignore that for a second, right? But the idea was that,
no reply at DYDX.com.
Yeah, exactly. Right. Yeah. Or no reply, like Starkware headquarters in Israel or whatever. But anyway, so like the point was that like we weren't controlling your funds, but we were controlling kind of every aspect of how the system operated, right? But they could do that because all people wanted out of DYDX was like fast trading, right? They just wanted like deep liquidity, fast execution, a lot of different options to trade. And, so DYDX, interestingly, was like the kind of, 2017 centralized exchange playbook of like, only list 10 assets or whatever, but just be really like liquid. And then someone else comes along, Binance, and says, well, why don't we have 100 assets, right? And people are like, well, actually, you have the 10 assets that I want to trade, but the other 90. And so you kind of migrate away, right? So that's like, it is just an interesting thing to think that like they were kind of doing the centralized exchange playbook from like 2015, 2016 or whatever, of like be really deeply liquid, but they didn't need composability because you were just literally, you just wanted to trade. You wanted to go and trade ETH perps. That was it, right? Whereas if you were, let's say, Aave, right? And you wanted to have a lending market, but people were doing weird stuff with like ETH, and there was no way for them to like take their wrapped ETH derivative and put it into your protocol because you were off in your own silo. That's a huge impediment to growth, right? That would have not really worked, right? So DYDX had the luxury of kind of going and parking themselves in this little kind of centralized, app chain that they built, right? Because it didn't really diminish the utility. But for almost every other protocol, it would have, because not being able to like move assets between and create linkages and things like that, wouldn't really have worked. Now, the interesting thing is that what I think we've realized now is the composability for a perps exchange is actually valuable. But we didn't know because we didn't have one that had composability. And so we're seeing with Synthetix that like Synthetix having composability and being a liquid perps exchange or GMX or whatever is actually beneficial because people start building stuff that feeds into that, cross margining and other cool things that just couldn't exist on DYDX because you can't cross margin it because you're in your own silo. And so I think that like that is where we're seeing that like composability has value, but you don't see it until you build cool stuff and it works.
Mm-hmm. Would you say that that's one of the things that like composability in DeFi is a beautiful thing? Flash loans and cross, like it just, the ability to innovate is incredible, but it feels like super early still. Like it requires a level of sophistication. Like you've seen the meme, like you take this asset, like it's pretty, like it's crazy to think, but like I would say like it's limited to maybe 1,000 users that are really kind of taking advantage of composability. Is this something that like you think over time will play up and really differentiate DeFi, where maybe the aggregator, the wallet, or the financial institution really takes advantage because there's this whole, as you said, ecosystem that is being built on top of Synthetix, but it's like too early. And you're just sort of like building with like a very core set of crazy Spartans, which is, by the way, historically been the case, hoping that one day like all these kind of innovations come out of composability.
So you can do DIY composability, which is cool, right? Like that was like DeFi Summer.
Yeah.
That was people being like, oh, okay, like I'm just going to build my own thing, aggregate stuff, whatever. Like, so that's definitely a thing, and that's always available. And that's how the experiments happen, right? But if you look at composability, the best example, I think, still historically of composability is like InstantApp. InstantApp just said, hey, there's like an interest rate arbitrage between, Maker and Compound, and people want leverage and they don't care, they just want the cheapest thing, right? And then 1inch probably was then the next best example of like, people just want to trade and there's like 50 different places where liquidity is pooled. Why don't we just put a layer on top of that and we can, start, and like that worked amazingly well. And now you have CalSwap and there's all kinds of stuff. So like, I think, that initial experimentation is like always kind of DIY. Like you just have to turn up and just test stuff out, but then you can systematize it over time. Like the InstantApp guys built that in a hackathon and we're like, what if we could just, click a button and go from Compound to Maker or Maker to Compound? And then they're like, well, why don't we put an interface over that? And all of a sudden they had like $5 billion of TVL or $1 billion, something like that. Right. So, people will systematize composability after the experiments demonstrate value or utility.
Maybe for a skeptical listener that went through like kind of the global financial crisis might say, wait a minute. I've seen this movie before. Like you talk about efficiency. Great. Which I fundamentally think composability makes DeFi really efficient. Like these ARBs are exploited very quickly. And so it makes a more efficient system. The counter argument to that is, wait a minute, you built a really fragile house of cards here where as soon as you start piling up these Legos or Jenga tower, one brick goes down, shit hits the fan, everything goes down. What is your response to someone that like thinks that as he listens to you talk about composability?
So I think that the difference is that the opacity, all of the connectivity in the GFC, right, between different things was undermined on some level, or the risk of connectivity was exacerbated by the opacity of each of the things, right? Like you couldn't go in and inspect the state of, now you're laughing, right? But like, so like, in DeFi, if everything has its own risk management structure, right? Like if Maker has good risk management, good liquidation practices or whatever, it shouldn't matter what it's connected to. Right?
Yeah.
Like it should just have an efficient thing. Now, there is an argument to be made that like if ETH is the reserve asset of all of these things and ETH goes to zero, well then they all go to zero. I don't think there's a way that you can like remove that,
well, that's a more
right?
fundamental issue.
A fundamental problem, right? In the same way that like if the dollar goes to zero, then like all banks, like, or whatever, if there's fear, right? Like there are legitimate things that you just can't kind of avoid, right? But if every silo of liquidity has its own risk management practices that are transparent, and then you connect them, can bad things happen? 100%, right? Is it much less risky than connecting a bunch of opaque, centralized things to each other? 100%. Absolutely. It is.
Well, yeah, I was laughing more so because you talked about Oracle problems in DeFi. I was just thinking of the scene in The Big Short where like they're looking at the housing like bubble is bursting and like the CDS, like the instrument that they were like using to short the housing hadn't moved. And it's like, guys, like this is fraudulent. Like they're calling Goldman saying, guys, like update this thing. Like the housing crisis just like the housing bubble just burst and the index hadn't moved. So anyway, it's like, it's just interesting.
Well, yeah, when the Oracle provider lives in one of those silos, right? Or like a couple of them.
Oracle provider.
Actually, no.
Yeah. When they have a huge book that they need to offload, they're going to delay the Oracle for a bit.
Yeah.
No, you're absolutely right.
Exactly.
I hope, I mean, it's so great having you on because you have a very sober take, I think, but also optimistic one in many ways, a balanced view as someone that's been around for such a long time and you've gone through a few pivots. And I guess as we round out, I do want to just do a quick fire round questions, but I don't know if there's anything else you want to cover on the Synthetix front or things that you're excited about generally that you're investing in recently before we go to the fire round.
No, I think, fundamentally, I'm excited that we now have the infrastructure that we've been looking for a long time. And I think the thing that shifted for me and you constantly, DeFi forces you to learn lessons. One of the lessons I've learned is that a single solution to a problem is actually not a viable marketplace, right? And, this is probably the lesson from Optimism, I would say, is that in order to be a credible alternative to the incumbents, you need like an ecosystem of solutions, right? With different trade-offs. And I think that's where we're at now. Like there's an ecosystem of L2s within the Ethereum ecosystem, a sub-ecosystem of L2s that is viable. The same thing is true of like wallet providers. I think we need we can't just have like a single, even though that would be the optimal solution is just have like one wallet that does all the things and one L2 that does all the things. I just think that's not realistic to expect, and that it's better to have an ecosystem, and that exists now. And so I think we're in a position where, if the market starts to rip up, this year or next year or whatever, that we're going to be in a place where we can finally do what we've said we would be able to do, which is actually, provide an experience that's better than a centralized exchange. And not on some metric that no one cares about, right? Like, we're not going to fraudulently steal all your money. No one cares about that when the market's moving up. Like actually on the things that people care about. Like we've got better assets, we've got better liquidity, we've got better utility, we've got better, whatever, uptime. Like we've got all these things that are actually the metrics people care about, and not like, hey, we're worse in every way except we won't steal your money. Because it turns out people don't care about that. They'll give it to the guy who's going to steal their money. On
the efficiency score, as you said.
Yeah.
Faster, better, cheaper.
Exactly.
All right, man. This has been great. Let's do a quick fire round.
Cool.
5-6 questions. What's been your worst trade?
I sold several thousand ETH at about $7 in 2017. That was probably my worst trade.
It's a pretty bad trade.
I feel the pain still.
I had a good reason.
I've been there.
Not a good reason. In hindsight, it was not a good reason. Yeah.
Well, but Alex sold a ton at 18 and then went back to 9. Yeah. Good times.
Yeah.
Best trade.
Yeah. My best trade is probably sticking with SNX.
Nice. How many hours of sleep do you get now? And is it more or less than it was 2 years ago?
It's a lot more. I used to sleep, 4 or 5 hours a night. Now I try and get like 7 or 8 hours of sleep. I've realized the value of sleep.
Is that because your kids are getting older, or just because,
It's probably a little bit, but also like I've made a concerted effort to get more sleep. It's something that I just didn't focus on.
Nice. Can't help but notice a bunch of really nice musical equipment back there. What's your favorite song?
My favorite song of all time is probably "The Diamond Sea" by Sonic Youth.
Nice. And perhaps last two, what's your best advice for someone that is in crypto or looking to get into crypto?
I think if you're looking to get into crypto, find something that excites you, that people are sort of pessimistic on, right? Like find a problem that you're excited by, that you can put some optimism towards, that the consensus is like this is not a thing, because oftentimes it is, and that's where the opportunities lie.
That's awesome. Kain, thanks for coming on. Always a treat having you, and really appreciate the time. If anyone wants to learn more about what you're doing or about Synthetix, what are the best kind of ways to follow you? I
mean, Synthetix Discord's always a fun place to hang out. Be careful going into VGen trading, but everyone else is pretty safe. And then you can follow me on Twitter, by my Twitter handle.
We'll post that in the show notes.
Yeah, cool.
Awesome, sir. Thanks so much.
Sir. Yeah, appreciate you.
Thanks, guys.